Friends, in this video I want to tell and show you how to short a position of your option strategy. I strongly advise against shorting in cryptocurrencies because you can lose a lot of money, if not all of it. But options allow you to make a fairly safe short, and there are many option strategies you can use. And those are what I want to show you, so that you can short relatively safely. So, Bitcoin is now showing a new high at 44,500, for example. If you expect Bitcoin to go down substantially, let's take a look at the hourly time frame. You can already see the Bitcoin spot trying to go down to 40,000. If the price of Bitcoin goes down to 40,000, then be sure that the price will go even lower, and under selling pressure, it may go to 38, 37, or even 36,000. Does such a scenario have the right to live? Yes, it does. Okay. So I open the options board and let's pick this year's final series. We have two choices: sell call options or buy put options, or a combination. I suggest we start with the easy way, but not the safest way: selling call options. The idea of short position is to sell as high as possible. That's why we sell call options out of the money of strike 43. They are expensive, volatility is high. I sell 1,000 contracts and get the following. The break-even point is at 44,200. If the price stops at the level before 44,200, I make a profit. If the price rises, I get a short of 1,000 Bitcoin futures, which is 1 Bitcoin. If my scenario doesn't work and the price continues to rise, I will take a serious loss. This is a dangerous course of action with shorting. This strategy is similar to selling futures. The negative delta rises along with the price of the asset. If you do not expect the price to rise significantly, then sell call options as much as you like, but determine your acceptable risk level. If the price reaches a dangerous level for you, buy back the options, close the position, and forget about it. There's a more interesting solution: selling options in a ratio spread strategy. This is also a short position. We have here a cap like this, and a break-even point is now further away. 1,000 options of strike 44,500 I bought, 2,000 options of strike 43K I sold. The risk is still 1 Bitcoin. If the price does not exceed the 44,500 level, I will make a profit. This strategy needs to be managed. Ratio spreads are very manageable. You can apply rolling to the sold call leverage 43 and expand the profit cap. But still, the risks are high, and this venture is dangerous because Bitcoin is in a bull market phase right now. Everyone is waiting for the US Securities Commission to approve the Bitcoin spot ETF applications. A bunch of Wall Street investment companies have filled these applications, and halving in April is also playing a role. So I would choose a strategy with less risk. Now let's look at the buying of put options. For example, 39,500. Since we have already said that if Bitcoin, while going down, crosses the 40K milestone, it will go even lower. If the price falls below the strike we have chosen, here the break-even point is 38,600, we will get the delta of 1 Bitcoin sold. Buying can be combined with selling, and we will sell call options of strike 43. We get the following strategy. Even if the price neither rises nor falls, we are still in the 330 profit zone. If the price falls below 39,500, we get a short of 1 Bitcoin. By selling strike 43 options, I funded the purchase of strike 39,500 options. But the risks are still there. In case the asset continues to rise, we get a serious negative delta, and that's not good. I would prefer a conservative strategy, a simple strategy, bought vertical put spread. Or I would opt for more near-term series where options are cheaper. December 22nd, then let's increase the number of strikes and now take the same strike, 39,500, that I'm buying, and the strike 39,000 that I'm selling. and I get a vertical spread that will be cheaper than the previous strategy. The plus side of this strategy is that the maximum loss I will incur if the price rises is the premium of this very spread. So I won't lose more than $139. But also, by selling a small number, 200 options of Strike 43, this way I finance the purchase of the vertical spread by selling 200 contracts. This gave me a nice break-even zone. If the price doesn't fall too much and doesn't rise too much, my break-even zone will even bring me a small profit. If the price rises too much, I will gain 0.2 Bitcoin. If in my scenario the price falls below 39,500, I will make a profit of $510. You can choose not to do this and work with a simple spread. You can manage the strategy if the price goes down. You can sell options, for example, of Strike 38 or 39. In this way, we can even increase the profitability of our strategy. I consider this shorting option to be the safest. The losses here are not as bad as if you were to short the futures. And with any price movement, there could be serious losses. Some liquidation at Binance will happen and you will lose your entire account. To prevent this from happening, use options. And that's it. As always, ask questions in the comments. If this video was useful to you, put a like and subscribe to the channel. Suggest your topics for future videos. I wish you good luck and successful options trading.